Welcome back to Spitballing Cards. In today's video, stock market's down a little bit. We have some tariffs going on, and people may be concerned that baseball cards are a luxury and maybe on the way out. In this episode, you have me, Scott, we have Phil, we have Jeff, and we have Tariq Scooble, aka Raptor, in the bottom right-hand corner. Thanks for being here, guys. Obviously, there's some economic turmoil going on. Depends on what side of the political aisle you are, whether it's brilliant or idiotic. You can have that. We're not going to discuss that at all in this episode in any way, shape, or form. We just want to talk about, hypothetically, if it progresses to a worse state, what is going to happen to baseball cards if a recession happens. And we might even already be in one, technically, according to the technical definition of a recession. Maybe not. I don't know. But let's jump into that. What do you think, Phil?
I think that if it's a stock market recession, meaning if it's mostly isolated to stock prices taking a hit, which is most of what we've seen right now because it's early going with everything going on. If things stop and start with just a 20% dip, that's short term to like the S&P 500, some of the other major market composites, Dow Jones, etc. I think that the hobby can survive and in a way won't even be affected by that. And that's one of the nice things that we saw in 2020. Every situation is different, right? But we saw the stock market dip quite a bit. And for a lot of reasons, cards actually spiked, but we won't get into that because that was a very different situation. But what I'm saying is that the correlation between stocks and physical hard assets like cards or like art, you take it further with gold, the correlation isn't as tight as what a lot of people think. But if there is a deep recession, that's an economic recession, which involves unemployment spiking, then all of a sudden your hard assets that you might thought were a good inflation hedge, well, what are people going to be able to afford? If they can't afford groceries, are prices really going to continue to go up? No. The cure for inflation or higher prices is higher prices, because then people can't afford that. And that tends to be why real estate, which is also known to be an inflation hedge, if there's like a deep recession or depression that is broad-based, that's real estate tends to fall too, even though it's an inflation hedge. I was listening to the Compound podcast. They've got like a lot of different podcasts, Josh Brown. And he had brought up that Netflix is a consumer staple. And if there's a recession, that's going to be the last thing that people get rid of. So he's making an argument that's actually a decent stock. And in a way, that applies a little bit to our hobby with people that open wax and people that drink alcohol. People are going to want something to ease the pain, and they're going to want to open stuff. So maybe if there is a recession, the part of the hobby that doesn't get impacted as much in a negative way is Fanatics and their ability to sell, Fanatics Live app, whatnot, etc. The breaking aspect, the repack aspect. Yeah, that could actually keep like hobby box prices up. So which would be another negative from a depression or recession. It's like, great, I can't afford to buy milk, and I still can't afford to buy Bowman Hobby Box.
All right,
but,
Jeff.
That's enough for me.
What do you think, Jeff?
Well, we saw there was a little bit of a hobby uproar when this talk of tariffs was going on, because PSA was one of the companies that had already come out and said that they were going to have to, of course, pass that on to especially foreign consumers. And I think everything's been paused on that end. So PSA hasn't made any moves, but I know some of the collectors or consumers of our content are from Canada. And there was a lot of worry amongst Canadians that might end their ability to grade efficiently, or as efficiently as it could be. So I think that could be affected if we do get to a point where those tariffs are in play. And I would hate that, because it seems like this is such a good, the hobby is such a good global hobby right now. And especially with the players like Ohtani, he has worldwide interest and worldwide fan base. So I hope that part of the hobby isn't impacted. And I think Phil's right. There's some similarities to 2020 and some differences now. Of course, people are still able to spend their money on going to games and going to bars to watch games, which they weren't able to do then. And a lot of that money got funneled into the hobby. So we don't see exact similarities there. But I feel like we're heading in a good direction with the hobby. So I'm hoping that we don't hit that deep recession that Phil was alluding to.
Ty?
I think at the end of the day, it is a hierarchy of needs conversation. And if people's basic needs are being met, and they care a lot about the hobby, they're going to kind of keeping that at a priority level in terms of the basic consumer demand of the collector, which, in spite of what it may feel like when you're on social media or maybe YouTube, or especially at card shows these days, the collector base, I think, is still very, very, very strong and dominates the overall demand in the sports card world beyond the like speculation and flipping and investment aspects of it. So, you know, we've seen the hobby sort of stabilize and then progressively rise over the last year. As Phil said, if it's just a stock market impact, you know, obviously that who does that impact the most? It impacts day traders, and it impacts people who are of retirement age trying to draw on their investment accounts. But then it starts to have the trickle down to the actual companies and what they can afford to do. And if layoffs start to happen, unemployment goes up. You know, now you're talking about people who don't have money that talk about a fear factor. Like, if I lost my job today, which I hope I don't, and I hope there's not a big card market collapse, you're not going to be spending that money on things that aren't essential. And so that's obviously like the biggest thing is, you know, if there's a housing market collapse or there's a lot of unemployment, you know, trickle down, that's going to have a big impact. The other big wild card is just the end consumer good cost and how that could be impacted, both, you know, short, interim, and long term, with tariffs obviously driving costs up to the end consumer for certain products, at least that aren't produced as affordably or in enough supply in the US. But the big thing is, you know, like you said, Scott, without making it political at all, it seems like we're very day to day right now. So I'm trying not to put the cart before the horse and get too concerned in one direction or the other. There is a lot of uncertainty around it, though, and I definitely feel for our, you know, fellow hobbyists in other countries who may be, you know, immediately feeling the impact of this much more significantly than we are. So, and that is a big aspect. You know, even just take China in a vacuum, and there's a ton of card demand in China, especially for basketball cards, which already has been pretty much a bear market for the last like 3 years now. So that particular segment of the hobby and basketball cards could be the one that's impacted the most negatively because of the impact with China.
Yeah, it is interesting. Our audience, about 10%, almost exactly. No, it's 11%. Did my numbers wrong? 11%, 10.9% of our audience is over the age of 55. So maybe those individuals are more concerned. I'm 30 right now, and so to me, I'm not too concerned about it, right? Because I have currently job stability. I'm not concerned about that yet. So for me, it just feels like another one of the little blips on the radar where you it's hard not to overreact. But I do think, like Phil mentioned, at some point, a small recession, like small, we're not talking about like a big dip, like a 2008 situation. It may help the hobby a little bit. Maybe not the ultra high end, but the mid to low end. There's more people who are trying to turn away from, you know, the world and trying to focus on the fun. And I think that could help slightly. But I do think a lot of people's card money is not the same as their real money. I know mine isn't. I don't view it as the same money. I mean, cards are an investment, you could say, but it's card money. A lot of it was made in cards. It's card equity I built up. So I'm not really concerned about it yet at all, if I'm being fully transparent.
There's a lot of uncertainty around supplies. I know that's a big concern for a lot of people, and
Card holders and things.
The, you know, Ultra Pros and BCWs, and Ben Burrows did an article on Collect, and he's been trying to chase down a lot of comments from these different companies and how much they think it may or may not impact them. But basically, any like manufactured goods right now that are tied to the hobby that are being made in China, that's a piece that could see.
Yeah.
You know, we had toilet paper shortages a few years ago. Could we have top loader shortages in 2025? Or one touches, or, you know, whatever else may be getting manufactured abroad. So that's an interesting one.
The materials that Fanatics uses to make cards, those are all sourced from
the paper. No, I mean, I don't think they're willing to comment.
Yeah, that makes sense.
Yeah.
Yeah, I that could be interesting. going through a recession and all their product prices just double. Like, wait, what?
Yeah.
Yeah. I would be far more concerned right now if I were Fanatics. If I were an employee of Topps right now or Fanatics, I'd be more concerned than I am as an employee of Sports Card Investor. Only because I think there's potential for like much bigger immediate impact and then like sweeping pauses or layoffs or other things. Whereas like the card market sort of exists either way. Like I said, like in the hedge against like dollar bin cards, like they're $1. Like you don't have to worry about the price falling out on those. So
yeah, maybe high end really is the only thing that needs to be concerned.
It might be like that end slightly below high end.
Yes,
like where it's like the upper middle class that gets most impacted by this potentially and loses their jobs and then just goes, I've got a family and a mortgage and whatever. Like I got to pause my card buying right now, and then all those cards, all the lunar glows and everything just go.
It's like everything we own. What's the price point you think, Ty?
What do you mean?
What's the price point that'll be most affected? Anything under 10,000, 5,000?
I
think anything like 200 to 5,000, like in that range of cards, I would be worried about.
I'd be worried about the lower end segment too. I think we've seen how slow and gradual bear markets can be in this market. I think it has to do a lot with people's emotional attachment to the cards. So I think you want to target cards that people are emotionally attached to and have the highest emotional attachment to. So stuff that can't be replaced. But yeah, you could look at the cohort of buyer and be like, this person literally is just parking their money in another asset and just happened to pick sports cards. And this is literally, we all say, oh, 10-year, 20-year hold. No, they actually mean it. Like they actually mean 20 to 30-year hold, and they can deal and weather the storm. And they plan for this scenario actually. And they're going to continue to hold this $600,000 Ohtani or Mickey Mantle card. So I think those cards are pretty safe. I think everything.
Cards like this, $100 Paul Goldschmidt card, $200.
Yeah, or like a $5 card. Like if the stuff all above it collapses, it will too, I think. And it's higher printed too. So it's so replaceable. Yeah. You want the stuff that's not replaceable.
The lower end stuff may be more impacted by staleness, like less likely to technically see a big price dip because there may just not be comps. Sales volume overall might just drop where people go, it's too much work. I'm not going to let this $5 card go for $250. Like they're just going to hold it. I don't think there's like a big, let me just try to liquidate my whole collection. Maybe there is, but a lot of that's probably more likely to get liquidated to card shops and then sold and whatnot without any track or traceability, so to speak, on like online markets than the cards where if I'm like sitting here and I'm like, crap, I just lost my job and I was already only cash flowing, 5% per month above what I needed to be. And I've got $10,000 in cards that's $200 and up. Like that stuff can just hit the market in a glut, and it's not, it's gonna get sold online in most cases. So those are the ones that I think you could see in the data, as opposed to like the $5 and $10 that just might get stale, and you might see the sales volume decrease by 100% or something.
I look at TCG, and people might be looking at Pokemon specifically and being like, oh, that market's cooling down. Is that related to the economy? Is that related to the potential recession that could be looming? And the answer is no. Pokemon, what they're dealing with is cyclical within Pokemon. I think other TCGs might even be thriving right now because their bull market, maybe it was helped from Pokemon and its success, but it's on its own cycle and it's just getting started. Pokemon has been in arguably a 12-month plus massive bull market where a lot of the single prices have gone up 10 to 20x.
Yeah.
What happens when prices go up 10 to 20x? We learned in 2020. What happens when prices go up 10 to 20x in a short time period from demand that's not completely organic, because although Pokemon has the greatest base of collectors in the whole world, the most expensive and valuable IP in the world, and is growing in a lot of facets and is able to support 14 billion cards per year and print more the next year, a lot of people that are in it right now are opportunists and aren't long-term investors or collectors. They're in it for the money. And the money right now is hard to come by. So where they're going, maybe they're going somewhere else. And if the market starts to slip and fall, the undercutting begins and more folks exit. Again, the parallels with sports cards in 2020, 2021.
Could it be a buying opportunity for someone who collects random niche players like I do?
Maybe. Yeah.
Think like Andre Drummond or Larry Walker or Keston Hira. Like, those type of guys people may need to liquidate. And who else is
Yeah.
going to buy him besides the super collectors? So maybe it's a good opportunity there.
It's possible.
Phil, who do you collect? If I said, who's the one player you collect, who would you say?
Dollar bills.
Charizard?
The one who will make him the most money next year.
Juan Soto.
Juan Soto.
Plus, I like Corbin Carroll. I still have got a few of his cards. And Otani. Those are my three. Especially since, you're asking me on April 14th, Corbin Carroll has to be in the mix. Make me look smart.
Number one. Phil's ahead of the curve.
Who's your favorite baseball player of all time?
Bonds is actually a guy I like a lot too. But that's not like an emotional attachment. That's just kind of like, and people have called me stupid, think I'm throwing my money in the drain, but I don't know. I don't see Fangraphs having an asterisk next to his WAR number. And when you look at comparisons of players, I don't see those getting like redacted in the infographics I see online posted whenever somebody's having a great season or their Hall of Fame trajectory is really impressive. Then they get compared to the all-time greats. And then we're getting more lists that come out that get publicized and get deleted on Twitter that have names like Pedro Martinez on them and a number of current Hall of Famers like Adrian Beltre. And there's other guys that expect to be on there too, depending on, we're looking at steroids or HGH. But I'm not here to talk about that. So that's just all speculation. So
Guess what I just saw on X?
I don't want to guess.
Chris Bryant is going to the IL. Oh no. With
Hasn't he been there?
lumbar degenerative disc disease. That sounds really bad.
It's his second home is the IL.
Dude, want to guess Chris Bryant how many home runs he's had since he's been a Rocky?
Probably more than Javier Baez has had as a Tiger.
I don't know. It's going to be close. Since 2022, 4 years, he's had 17 home runs in 4 years. He's been worth negative
a lot of money
1.6 WAR over the last 4 years. He robbed the Rockies.
We'll know it's May when Royce Lewis, check, injured on the IL, Chris Bryant, and then it's just Buxton and Trout.
Yep.
We're almost.
What?
Almost there, halfway there.
Oh, gross.
Since 2022?
Yeah.
Yeah, I guess Baez technically had 17 home runs in 2022.
Oh, yeah, that's in 1 year. That's more than Bryant had the last 4.
Since then, Baez has 15 home runs and like a 220 average.
What's his OPS plus?
63 and 46 over the last 2 years.
Chris Bryant's at 84 OPS plus, 695. But he's not an all-world defender.
Baez has been okay this year.
He's a good defender. So
I'm not going to jinx it. He's been okay though, but he still swings like a maniac at everything that comes at him.
Yeah. All right. Well, thanks for watching, everybody. Let us in the comments down below if you're worried about the economy and anything else there with sports cards, and we'll see you in the next video.
And be nice. Don't get political in the comments. Just be nice.
Take care.